Just because the bank loan says 30 years doesn't mean that you need to take that 30 years. You can speed it up a little bit because it's your property essentially.
As a property investor, one of the things I'm thinking about constantly is how can I pay off my properties faster? Now in this video, we're going to explain 5 different ways that Simon and I use or plan to use to pay off our properties now and in the future. And obviously the reason we want to own them outright is to create a passive income stream for life, to reduce our risk, and to also create choices to spend time with the people we care about, doing work we enjoy, and, you know, deciding how we want to spend our days. So what do you reckon the first one is, man?
The first one for sure is stock standard principal and interest. So refinancing the portfolio, making sure that you're paying off the principal component as well as the interest, just to make sure that without even thinking about it, you're immediately paying down the principal of the property.
You know, so the bank will generally write a 30-year, sometimes a 40-year plan for paying off the property. And if you were to just be the stock standard person, like most of us are, then worst case scenario, if you just follow the bank's payment plan, you'll own the property outright in that time. But I'm like, well, I don't want to wait 30 years
exactly.
for those choices. I want to be there sooner.
For sure. And as you start to build that portfolio, it can become a little bit daunting when you go into your bank account and you're like, oh my God, I've got so much debt that I need to pay off. You're like, how the hell can I do this? And, you know, the 30-year idea to me just seems far too long. You know, that means I'm going to be 58 by the time that I own these properties outright. And I really think that I can do a hell of a lot better job than that. So let's start to break down a few of the other things that we can do, which isn't rocket science either. Next one is just using extra savings. Generally, once you've got your portfolio, you no longer have to save to continue investing in property. So rather than saving to buy more assets, you essentially save to pay off debt. Bit of a boring way, but it helps.
Massively help. You know, so many people we work with have saved $500 a week to a couple of $1,000 a week, and they've put that money into assets, but now they've bought the assets that will make them free. They're accumulating all of this extra money, and rather than just going out there and blowing it, it's like, I definitely have increased my lifestyle a little bit since I was originally started, when I was just going hard at paying off debt.
I walk into Ben's room the other day and he's got all these nice watches set up and all of his nice sunnies. I'm like, loving it.
Man, I've been doing that since I was at uni. It was just like, now it's like a $200 pair of sunnies versus like a $50 pair. But I was like so OCD and like stacking them all nice and neat.
It looks so nice, not gonna lie. It looks like cribs. You walk into like a nice wardrobe and it's like shirts are folded perfect. It's set.
What's the Marie Kondo way? Is that the chick that's like the ACD like folder? Like that's me and Lisa been following that from YouTube and from Netflix for sure.
You get your little folding board out to make sure it's perfect as well.
Oh man, what have I done? The next one that I follow as well is not all properties, but some properties, and definitely go and talk to a tax accountant, a depreciation specialist, or an accountant about this. But some of the properties that I own are a bit newer, and because they're a bit newer, I get a bit of a tax benefit. So again, instead of spending that money, I just literally use that to pay off the debt. Now, whether it's paying off the debt or just putting in the offset account, I see it as the same thing. The funniest example is Haydos, who's one of the guys, past client, plus one of the guys in our team that works for us. He wasn't expecting a tax return this year, and I think got $11,000 and his missus got $6,000 or something because of their properties. And he's like gone out and bought a couple of items for his new home, but then he's put a huge chunk of it straight off the debt on his properties.
So awesome. And it's not even just for brand new properties or newer properties. I've got 2 shit boxes. Let's not beat around the bushes. My properties are old and run down. But I have done a few minor upgrades to the properties, but not too much. But I still got one of the depreciation reports, gave it to my tax accountant, and over the next, I can't remember exactly how long, but about 20 years, I'm going to get back tens of thousands of dollars. It's crazy.
It's crazy. So again, we don't know that stuff, but go and talk to the guys that do. Washington Brown's a good company. BMT's a good company for those reports. I don't know how to interpret them. I just give them the solicitor, the accountant, and then they just figure it out for me and whatever the Australian government's allowing at the time.
Now, the next one is using your surplus cash flow. So as you begin to reduce the debt on your investment properties, the cash flow, the positive cash flow that you're going to be receiving is likely to increase. So rather than taking that out and using it to buy yourself a new pair of sunnies or a watch, maybe just putting it back against the property is going to help speed up that journey as well.
I'm flogging off all these watches. You're making me feel bad. I'm going to do the Gary Vee thing and I'm just going to like,
I've got one as well.
What's he call it? Like he does his little like shop front where he's just constantly buying and flogging off cheap stuff.
Love it.
But you know, this surplus cash flow is interesting. So as a business and as an investor, I do two things. One is these houses with secondary income streams through like tiny homes or granny flats or secondary dwellings. And generally those properties, because interest rates are so low, provide me with a little bit of passive income. And then I just keep that in the offset account paying off the debt. You know, other types of properties that I own are more just a single income blue chip asset that I hope is going to grow in value over the next 30 years. And they might not pay as much income today, but slowly, as Simon said, as I wipe off that debt, I might get 100, 200, 300 bucks a week of income. And it's so easy to spend that money. Like I remember my very first property, I thought I could manage it. I had a friend staying in there and I'd go down every Friday night. He'd give me like an envelope of cash.
Straight over to tradies.
I'd go straight to Northies and tradies and just me and my mate would spread the entire thing and we wouldn't stop partying until the money was gone. That was like how I lived for the first year.
Honestly, it's how most people live. You know, you get a pay rise or you start earning a little bit more income. Most people's lifestyles get a little bit more expensive. So being diligent through this process is really important and delaying that gratification as best as you possibly can so that you can have more years of living free.
Now, another thing that I've done in my own portfolio, and this isn't for everyone because it definitely increases your risk, is investing in what I call a partner property. So let's say I've got one house and one granny flat that today gives me $40,000 a year of total income. And then what I've done is I've gone out and bought another $400,000 house on the beaches of Brisbane, and I might hold that property for the next 20 years. And over the next 20 years, if it grows by an average of 4% compounded per annum, then it's gone from $400K to $800,000. Now, in 20 years' time, I could sell that property, pay the taxes, pay the agent to sell it, pay the solicitor, but I'm still going to have a big chunk of cash that I wouldn't have been able to save when I sell it. And instead of spending that money at that time, I just use that chunk of cash from that partner property that I've sold to pay off the debt on my other assets faster.
And this is my plan as well. I'm still in the accumulation phase, so I haven't necessarily got to a point where I've been able to figure out my personal strategy for this, but that's exactly what I want to do. Rather than, I'll use some of these other ones as well, but rather than, you know, using my savings, I want to leverage off the market. I want to leverage off the property market. I also want to leverage off the stock market to use those gains to speed up that journey as well. So, you know, there's a number of different ways that you can do it, but personally, I'd love to flip properties. You know, maybe do one flip project a year where you turn around a short-term profit, use that short-term profit to pay off a chunk of change. And something that we're maybe looking at doing is learning a bit more about the stock market and using that as a bit more of a longer-term play. Once again, using that capital to pay off the debt when the time's right.
You know, we had a meeting with our accountant the other day, Dan from CTB Advisory, and he was sort of talking to us. I said, Dan, you know, what do we do? Like, because we're not traders, we don't understand it at all. And he was saying, well, you know, there's obviously heaps of different ways to do it. But he said some people might invest slowly in quality stocks for 15 years. And then in 15 years' time, they might liquidate some of them to pay off properties so that they've got that income for life. You know, again, go talk to financial advisors, go talk to accountants about that stuff. We certainly don't have an idea, but I just know that there are faster ways to pay off debt than just principal and interest and saving your way there in the future. And these are some of the ideas that we're using at the moment.
For sure. Just because the bank loan says 30 years doesn't mean that you need to take that 30 years. You can speed it up a little bit because it's your property essentially.
Without a doubt. So we wish you guys all the best. These are just a couple of little tips and tricks that you can use. If you haven't already done so, please subscribe to this YouTube channel. Give us a thumbs up on the video. Share it with someone else who's looking for some ideas in terms of how they can get there a bit faster. We wish you all the best. And as always, stay safe. See ya.
Sweaty. So sweaty. Oh, that's good.